So good to have you join us today. Hello and welcome to Business Daily. I'm Joon in Seoul. Before we get started, let's take a quick peek at today's highlights. OPEC's latest decision to maintain production levels is driving down oil prices even farther, hitting levels unseen since 2009. We sit down with an expert to talk about how this is affecting the global economy as well as Korea. Income and spending inequality seems to be getting worse here in Korea, despite signs that poverty in the country is slowly improving. Global oil prices continue to slide, reaching their lowest level seen since 2009. Now, this follows OPEC's decision to not slam the brakes on production, which has sent prices tumbling even farther. Our Shin Se-min starts us off.
It's falling, and it's not showing signs of stopping anytime soon. Global crude prices plunged to almost 7-year lows on Monday, with the U.S. benchmark West Texas Intermediate crude shedding 5.8% at $37.65 a barrel. Brent crude got slammed too, falling 5% to $40.73 a barrel, also the lowest settlement since February 2009. Prices have not been helped by OPEC's decision last week to continue production at current levels, pumping out 31.5 million barrels of oil per day. OPEC, a group of the largest oil-producing countries, covers nearly 30% of the world's demand. OPEC has actually been ramping up production and has surpassed its quota for at least 18 months now. It's aiming to defend its market share by pushing out smaller rivals like U.S. shale producers. Oil prices have also been dragged down by a strengthening U.S. dollar, the currency in which oil is priced, in expectation the Federal Reserve will hike rates from near zero later this month. The depressed oil prices were keenly felt on financial markets. On Wall Street, the S&P 500 and the Dow Jones Industrial Average both finished 0.7% lower on the back of tumbling energy stocks. Oil giants ExxonMobil and Chevron lost over 2%. With few signs of optimism, most experts agree that oil prices will most likely remain low for 2016 and beyond, that it's difficult to know. Shin Se-min, Business Daily.
And to tell us more about this, Professor Yang Joon from the Catholic University of Korea joins us in the studio today. So good to see you, Professor.
Happy to be here.
So how serious is the situation with the drop that we've been seeing in falling global oil prices?
Well, the oil prices hasn't been this low since 2008. But if you look at the trend in prices, actually the price for oil was consistently lower than this before 2004. Now, if you look at the inflation-adjusted figures, then it gets even more interesting because for the most of 1990s, the inflation-adjusted price of oil was actually lower than it is now. And in the 1990s, we thought of that as a good thing. But now we worry about deflationary pressures.
So there must be various reasons behind falling global oil prices. Can you tell us more about that?
The biggest reason is probably the lack of demand because of the continuing global financial crisis. So you have lack of demand from Europe, lack of demand from China. Hopefully U.S. recovers, then oil prices will rise a bit. But right now, because a lot of the oil prices are determined from what they think the future demand is going to be, unless the recession seems to be ending, prices are not likely to rise. And another factor which is coming into this is alternate fuels such as shale oil. So that's also keeping the price in check. And finally, maybe it's a minor factor, but they just had the climate change meeting in Paris, and all the global leaders said that we're going to use less carbon fuels. So that also probably had a little bit to do with it.
And there seems to be mounting trouble for oil-producing countries like Venezuela, Brazil, and Russia. So how serious is the situation over there right now in those kind of countries?
Venezuela is a really interesting case because not only do they have low oil prices, but that caused just loads of other macroeconomic crises there. Their inflation rate seems to be about 160% per year now.
Wow.
And They have, and because so much of their foreign exchange earnings depend on oil, they have trouble importing necessities of life. They have trouble keeping people at work. They much rather just go out and scrounge around for necessities than they can resell in the market. Apparently, that gives them more income than just factory wages or company wages. So they're having a lot of macroeconomic problems there.
And despite all this, then why did OPEC decide to not to cut production and legitimize its overproduction?
Okay, well, some countries, Iran keeps on coming up in particular. I think because so much of their government budget and their social budget depend on oil, they feel that given the low oil prices, they cannot cut production because that cuts into their revenues that they can spend for government expenditure and social expenditure.
Okay.
Now, if they were completely convinced that all the other countries are going to cut production and the price of oil will rise, then the optimal solution is for them to cut production. But I think the OPEC members themselves are sure that other members are going to cheat. Other members are going to increase their output to get more revenues. And even if OPEC agrees, there's non-OPEC players like Russia.
Right.
So that kind of interaction is coming into play.
But then falling oil prices is not only causing problems for oil-producing countries like the ones that we just mentioned before, but also for advanced economies as well, right?
Well, a lot of analysts believe that the low oil prices are feeding into deflationary expectation. But I think a much more serious problem, as I mentioned before, 1990s, we had even lower inflation-adjusted prices than this, and that was thought of as a good thing. Mm-hmm. So I think this low oil price is actually a symptom, not a cause. And the cause is the continuing global recession and no hope that it'll recover anytime soon. So rather than worry about low oil prices by itself, I think we have to worry about how to end the recession.
Then let's look at Korea. I mean, we first thought that we could actually benefit much from the falling global oil prices, but is that the case right now?
Well, not really. The big problem comes with the Korea's petrochemical industry. The petrochemical industry imports oil and then it processes it and exports it, and that's one of Korea's major industries. But when the price for raw oil, the input goes down, the price of output also has to go down, and sometimes the price of output falls more than the price of input. So what happens is sometimes the petrochemical companies have to cut their margin, have to cut their value added, and that makes it harder for the petrochemical industry. So it's not entirely a good picture there. Also, there's the consumer side, the people who buy gasoline. Apparently, there's some problems because, well, Korea's maintaining a high level of gasoline taxes, so the people are not really seeing the cut in prices on gasoline.
And we're actually expected to see this trend continue for a while. Then how should Korea prepare?
Well, for one thing, I just mentioned gasoline taxes and consumers are not getting benefit from it. I'm going to be a bit contrary and say that the taxes should remain as they are, because we really don't want the gasoline demand to go up a lot during this time. During the 1990s, gasoline demand went up a lot of SUVs, but then that hurt us when the oil prices rose again. Petrochemical companies, they have to try to deal with the low oil prices, usually by using the futures or options type of markets, but it's going to be very difficult for them. For Korea as a whole, as I mentioned before, this is really a global demand problem rather than a low oil price problem. So we have to figure out how to raise demand, if not internationally, then at least domestically. And well, the prices I don't think has bottomed out yet, so this might not be a good time for it, but Korea should be start to thinking about increasing its stockpiles of oil. Stockpile it up when the prices are low, and when prices rise again, we can use it to control the supply of oil in Korea.
Okay, thank you so much for coming in today, Professor.
Thank you.
Once again, the government plans to front-load its spending next year to kickstart projects meant to help prop up an economy long bogged down by lagging domestic and global demand. An allocation plan for the government's 2016 budget was approved at a cabinet meeting on Tuesday, which called for 68%, or roughly $280 billion, to be spent in the first 6 months of the year. The finance ministry said money will be allotted ahead of the fiscal year so that cash can be dispersed on January 1st into projects to spur job creation and economic growth, as well as to assist the livelihoods of low-income households. The gap between the haves and the have-nots doesn't seem to be getting any narrower here in Korea, though the poverty rate has fallen slightly. Our Kim Min-ji has more.
Inequality in Korea hasn't deepened much over the past few years, but it isn't getting any better. According to the Korea Institute for Health and Social Affairs, the Gini coefficient, which measures inequality, has come to a standstill or dipped in terms of disposable income and spending. The coefficient is a measure used to gauge the income gap, and a reading of 0 means complete income equality, while higher numbers up to 1 indicate a widening gap between the rich and poor. In terms of disposable income, the Gini coefficient climbed to 0.305 in the wake of the global financial crisis in 2008 and has been on a downward trend since 2009, falling to 0.294 in 2013. And it has remained unchanged since. As for spending, the Gini coefficient stood at 0.266 in 2009 and has been going down, but in 2013, it spiked up again to 0.254 and to 0.262 in 2014. However, poverty in Korea seems to be slowly improving. The relative poverty rate in terms of disposable income stood at 13.3% in 2014, down 0.1 percentage points from a year earlier. Relative poverty is measured by lining up all households and taking the middle value and applies to those who do not earn half of the median household's income. The figure hit 14.2% in the aftermath of the global financial crisis and has been slowly declining since. The figures improved across all categories, with the exception of one-person households, which edged up slightly. Kim Min-ji, Business Daily.
Out of Korea's top 200 firms in terms of sales, excluding public institutions, only about half, or roughly 51%, have adopted the wage peak system. This is according to a survey by Korea Employers Federation, which said among those that have agreed to implement the system, about half said they will be ready to roll it out starting next year. But 23% of the firms said they're still under negotiations with workers, while a quarter said discussions have not taken place at all. Results also showed companies with automatic wage hikes based on seniority had a higher adoption rate of 55% compared to the 40% of firms without this system. This year, Korea experienced its worst drought in dozens of years, reminding us how important it is to manage water properly. And that's what Korea's Water Resources Corporation, or K-Water, is working hard to do, beginning with a multi-million-dollar project. Our Eunice Kim has the details.
A dry spell has hit Korea hard this year. In what's being called the worst in 100 years, drought has led to cracked floors such as this at Poryong Dam, which recorded its lowest water reserve rate since it was built. Nearby, water rationing has been put into place in 8 cities and counties of Chungcheongnam-do Province, a region that received only 45% of the rain it usually gets this year. It's in this context that K-Water is launching a $54 million pipeline project to funnel the natural resource from Kumgang River to the parched dam, passing on some relief, more specifically 64% of what the dam used to provide.
By connecting dams or water supply systems, we should ensure water shortage never becomes an issue, even during the most drastic of droughts.
As arid conditions are expected to persist through the spring, the government and ruling party last month earmarked $174 million to build waterways that connect Korea's 4 rivers, Hangang, Nakdongang, Kumgang, and Yeongsan-gang to drought-stricken regions, hoping to keep agricultural damage and resulting upward food prices at bay. Relatedly, K-Water, as it marks 48 years in business, is committing to win over public trust in its push to develop smarter ways to manage water in the new year.
We will do our all to build water management infrastructure that's efficient, scientific, and creative, and one that's foolproof even in long-term droughts.
The state-owned water corporation also has its eye on the global market, hoping to bring cutting-edge water management tools embedded with advanced ICT technologies to a world no longer a stranger to water-related challenges. Eunice Kim, Business Daily.
And that wraps it up for today. But we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching, and bye-bye for now.